Is Taiwan Semiconductor cementing its global dominance, or is it stretching itself too thin? The world's most important chipmaker made waves this week, announcing a massive capital spending plan of up to $56 billion for 2026. This comes as the company commits to a $165 billion factory build-out in the United States. At the same time, the company's founder, Chang, made his first public appearance in over a year, dining with Nvidia CEO Jensen Huang, who says he needs a lot more of what TSMC is making. So what does this all mean for the company at the heart of the AI revolution? Welcome to TickerWatch News for TSMC, Week 5, 2026. This is the weekly show that cuts through the noise to bring you the essential news and developments for Taiwan Semiconductor Manufacturing Company. This week, we're looking at record investment plans, a powerful shift in the company's customer base, and what it all means for its central role in the global technology ecosystem. Stock snapshot. It was a week of consolidation for Taiwan Semiconductor, following a period of strong gains. The stock started the week trading around $338 and closed at approximately $341, marking a modest gain of just under 1%. This continues the stock's impressive run, which has seen it deliver returns of more than 72% over the past year. Trading volumes have remained healthy, in line with the recent average of nearly 12 million shares per day. The move came as the broader market showed strength, with the S&P 500 crossing the 7,000 mark for the first time, and the chip sector getting a lift from strong results from equipment maker ASML. The takeaway is that while this week's gain was small, it builds on powerful momentum, with investors closely watching every development in the ongoing AI infrastructure build-out. Top news and headlines. The biggest story of the week is undoubtedly the scale of Taiwan Semiconductor's expansion plans, both in the US and globally. The company confirmed it is committing $165 billion to build factories in Arizona, a move supported by a new Taiwan-US trade agreement that reduces tariffs on certain goods. This is part of a larger plan by Taiwanese tech companies to invest around $250 billion in the United States. This expansion is designed to bring production closer to major North American customers and diversify its manufacturing footprint. Fueling this expansion is a massive increase in planned spending. The company announced its capital expenditure for 2026 will be between $52 and $56 billion. That's a significant jump from 2025. This spending is a direct response to what the company sees as relentless long-term demand for artificial intelligence chips. It also raised its revenue forecast for AI accelerators, now expecting growth in the mid to high 50% annually through 2029. Finally, the week highlighted a strategic shift at the top of the company's customer list. Reports indicate that Nvidia is on track to surpass Apple as Taiwan Semiconductor's largest customer this year. This was underscored by a private dinner between TSMC founder Chang and Nvidia CEO Jensen Huang, who publicly praised the chipmaker as the world's premier foundry partner. This transition is significant, showing the industry's pivot from a mobile-driven market to one dominated by AI and high-performance computing, which now represents 55% of TSMC's revenue. Market reaction and investor sentiment. Wall Street has reacted with overwhelming optimism. A remarkable 98% of analysts covering the stock now rated as a buy. Multiple firms raised their price targets following the company's latest earnings and outlook. Bank of America lifted its target to $470, and Morgan Stanley also increased its target. TD Cowen raised its target to $370, citing strong execution, though they maintained a hold rating due to concerns about the initial costs of new overseas fabs. The consensus price target among analysts sits around $410, suggesting considerable upside from current levels. Institutional investors also seem to be buying in. Hedge fund ownership increased in the last reported quarter, and Cathie Wood's ARK Invest was noted as a buyer following the latest earnings. The overall tone in the news is strongly bullish, with a clear focus on the company's indispensable role in the AI supply chain. The positive price action over the past month and year shows that investor sentiment is closely aligned with this positive news flow. Technical and fundamental check-in.
From a technical perspective, the stock continues to show strong momentum. It recently broke through a key technical level and is trading well above its moving averages, confirming the bullish trend. On the fundamental side, there's a valuation debate. The stock trades at a forward price-to-earnings ratio of about 26, which appears reasonable compared to the broader industry, especially given its projected growth. The company expects overall revenue to grow at a compound annual rate of 25% over the next 5 years. However, some valuation models based on discounted cash flow, like those from Simply Wall Street, suggest the stock may be overvalued after its recent run-up. This highlights a key risk: execution. While the growth story is compelling, the massive capital spending could pressure free cash flow in the short term. The company is also facing higher costs and potential inefficiencies as it starts up new factories in the US, Japan, and Germany. This week's news powerfully reinforces the long-term narrative. Taiwan Semiconductor is the essential manufacturing layer for the AI era. Its global expansion is a strategic necessity to secure its supply chain and serve its biggest customers, even if it introduces new operational challenges. What to watch next week? Looking ahead, the focus will shift to execution. While no major company-specific announcements are on the calendar, investors will be watching for any updates on the progress of the Arizona fabs and how the company is managing its massive capital expenditure plan. Key price levels to monitor include the stock's 50-day moving average, which some analysts see as a crucial support level. A break below that could signal a near-term shift in momentum. The bull case is straightforward. AI demand continues to surge, new factories ramp up smoothly, and margins expand, pushing the stock towards the higher end of analyst targets, some of which are above $500. The bear case centers on risk. A global economic slowdown could soften AI hardware demand, or the company could face significant cost overruns and delays with its international expansion. The base case suggests the company will continue its steady execution. The stock may consolidate its recent significant gains before resuming its upward trend, tracking towards the consensus analyst targets in the low 400s. Thank you for tuning in to TickerWatch. Please remember this podcast is for educational purposes only and is not financial advice. If you found this episode helpful, please consider subscribing and leaving a review. It helps others find the show. We'll be back next week with another look at the news moving the stocks you follow.